the Florida legislator and Governor DeSantis and the regulators have bowed down to the greed of the insurance companies, and we've gutted consumer protections for the greed of the insurance companies. You and I know, like, that's just so absolutely ridiculous.
Right.
But the public doesn't know. The media doesn't know.
Welcome to 5 Minutes, your quick dive into the wide-ranging world of insurance, technology, and leadership. I'm Miguel Edwards, and I'll be your guide as we explore these topics that are transforming not just the insurance industry, but the business world at large. Along with sharing observations I've made over the span of my career in insurance, technology, and operations, I'll be chatting with some of the brightest minds in business and leadership. Whether you're a seasoned executive or a rising star, an industry expert, or just curious about how technology is revolutionizing insurance, this is your perfect spot for your weekly dose of insights. This is 5 Minutes. All right, well, let's jump in. And, first off, Nick, thanks again. Thanks for agreeing to take the time to spend some time chatting with me. Why don't we just start a little bit with your career journey as it relates to insurance and tell us a little bit about how you got to where you are now.
Yeah. How long is this podcast? So like most folks, I just sort of fell into it by accident. I was a biology major, sort of like a chemistry minor in college, with dreams and aspirations of going to medical school or graduate school and curing cancer. That was my goal. But I realized after I graduated from college that I wasn't actually cut out. First of all, I get queasy when I see blood or like broken bones, so that's no bueno. And I spent a semester at a graduate school doing research, and I'm like, I can't do this either because I was running the same experiment every single day, and it's like it takes a certain mindset to be a scientist, and that wasn't me. I love studying it, but that wasn't me. At the time, a friend of mine was taking over his dad's insurance agency, and he invited me in. And that was the springboard for me. I will be honest, like in the first 10 years, I was thinking, it was during the .com boom. So I'm like, man, that's exciting. I want to get over on that side. Never quite made it over. So I just sort of advanced my career from small agency to medium agency to large brokerage at Aon doing property coverage to wholesale underwriting. And then in year 10, I discovered catastrophe modeling. And that was like truly the springboard for me. That kind of checked all the boxes, got me back to science a little bit. You would get exposed to it, but you get exposed to economics and finance, and my insurance background came in very handy there, and built a career in cat, Miguel, and just kind of dove into it the way I would dive into any sort of scientific project, became a subject matter expert in certain things. I think I became really good at being able to read output from catastrophe models and arbitraging the decisions. Like, what decision should you make based off of the information that this model is giving you and all of the uncertainty around it. So I think I became pretty good at that. And 7 years ago, I co-founded an MGA in the flood space because I could see flood was one of the only natural perils that had not been touched by catastrophe models. And the modeling firms were just now dipping their toes, using a flood pun. I got a million of them, Miguel, into flood. And I thought, like, well, if we're first here, we can really carve out an underwriting space. And that's what happened. My MGA is still around, still very successful. I am not a part of it. Now, today, I am the managing editor or managing partner of Insurance Nerds and the co-founder of the Insurance Advocacy Forum of Florida. So my role has really changed towards communicating insurance, communicating risk, explaining to either the layperson or the media or business professionals how insurance is supposed to work. And Miguel, no surprise to you, most people do not understand how insurance works. And you will see me online having constant battles with public adjusters and others who, bring up really horrible ideas like, yeah, Florida should have a wind pool. just like really, really crazy ideas. So that's my roughly 5 minute elevator pitch.
I love it. My favorite one, by the way, that I think I saw, and I think we were both commenting on this thread as well, is that those gnarly unregulated MGAs are the reason why insurance is so bad in Florida. Those unregulated entities. We've got to fix this problem, Nick.
It's the wording is the same every single post. It's while legal, regulators frown upon them, and it's like that's not true. That's not true at all. These things have been around for 100 years. Like this is a common vehicle for insurance entities to engage. Right? It's not just like carriers selling insurance. A lot of carriers have MGAs. A lot of MGAs become carriers. It's very common.
And you're right. There's no shortage of misinformation and misunderstanding out there to go around. But now you mentioned you're the managing partner, managing editor of Insurance Nerds. Fascinating concept. Been on the site, took a look at an amazing amount of content. Seems almost like a little bit of a syndicate type of thing that you've got going on there with lots of different contributors. Talk a little bit about what you're doing there and what ultimately what the value or the mission is of Insurance Nerds.
I became managing partner last summer, so I took a controlling interest in Insurance Nerds, and the site had always been very much content oriented, and the business model that and I had been associated with them in the past before I started my MGA, and the business model was theoretically going to be an advertising model. So you produce content, you get a lot of eyeballs, and you create advertising. But strangely, that didn't work well for us. And what we found out was because people are coming to the site to learn, and they're coming to the site for community, to engage, and that's different. So putting up a banner ad is not going to have the same effect, even if you have tens of thousands of people looking at it. They don't want to be sold to, and so the you will see over time. The website's about to be changed, and we're transitioning it to still very much insurance. insnerds.com will still very much be a content-oriented site, and part of our business model is we welcome guest writers, absolutely free of charge, as long as you're not overtly marketing your services and you're bringing thought leadership. You have an audience with us. But we're transitioning the business model to creating, helping firms create marketing for thought leadership. I think you recognize this. I mean, you're doing a podcast and you have a blog and you have a consulting business. That's a lot to juggle for a single person, right? And at some point, you're going to realize, I can't keep this pace up. It's too much. So that's where we're kind of sitting. Is for those firms that are looking for someone who can sort of automate a lot of the thought leadership, either do the writing or kind of take the writing and kind of run with it. We can do that. We add editing to it to try to make it, appetizing to the market, but also, we can help you stand up a podcast. We can help you put these marketing pieces in place. And we will have a separate domain where it'll be, Miguel, a pure marketing agency. Okay. Where folks will hire us to essentially, instead of doing like the traditional advertising, which I don't think is going to work in B2B insurtech, it's going to be, listen, just hire us. We'll do all of the thought leadership for you. Everything from content creation in a text format, video, podcast. We'll do the whole thing for you, but it's at a thought leadership scale, not like the Geico Gecko.
You mentioned people come to Insurance Nerds to learn. So talk to me a little bit about that persona. Who is this person that typically comes onto the site to learn about insurance from your content providers and folks that you have in there?
Yeah, well, in the early days, thank you to Tony Kanyas and Carly Burnham who created the site. They were sort of looking to recreate nostalgia. They created a lot of camaraderie with a group of young insurance professionals who were studying for their CPCU exam. I think this group all happened to be like a nationwide. And then, after they got their CPCUs and they kind of, went to different departments and then to different companies, Tony and Carly said, how do we recreate that nostalgia? Like, clearly there's a need for a community that can kind of get together and talk about insurance topics, how to study for CPCU, and bring that kind of insight and wisdom. So that's what they started with. It was geared towards the young professional. It was geared towards their career arc, right? Mm-hmm. Interestingly, though, they've been doing that for 10 years. So guess what? Those young professionals, Miguel, are now senior professionals and execs at MGAs and insurance companies and brokerages. But those folks keep coming back because what we've been able to do is to tap into like folks like you and others who are bringing, should I call it highbrow wisdom? But, basically like decades of insurance experience about strategy, about sales, about underwriting, about claims, like just high-end stuff that you're not going to learn at CPCU. You would only learn this with experience. So experiential folks who can write or podcast or do things. We are actively promoting that because that's what drives people to the site is insight and wisdom. They're looking for, hey, I'm confused. Which policy management system do I choose? How do I even choose them? How do I implement this stuff? What is strategy? I thought I had a strategy, but I guess I don't have a strategy. We're now like at a higher level of insight and wisdom.
Yeah, that makes sense. And I love how you put that because the way I like to try to articulate the content and what it becomes when you get that level of contribution is it's the confluence of academics and real world applicability, right? Because, you can learn about strategy from a Harvard Business Review article or something like that. But then there's the actual practice of building one and executing on one. And the truth lives somewhere in the middle of both of those things, right? You did mention your work with the Florida Advocacy Forum. Just talk a little bit about what that is, what the goal is there, because that's another important piece here that's got to be talked about just in terms of just the availability of insurance and the way the industry is working.
No shocker. Florida insurance is a mess. So anyone that's going to, there's no wisdom I'm going to impart on that. Everybody sort of knows that. But what I found, Miguel, incredibly frustrating as now, in 2 weeks, I will have been a Florida resident for 4 years. Mm-hmm. And so I saw the train wreck coming, right, over time. And I fully expected our lobbying groups and our trade associations, the folks that are representing the insurance entities to kind of muscle up and work with the regulators and work with the legislators. And that didn't happen. And we were literally on a financial cliff. And it took 2 special sessions here in Florida to finally put in things around litigation abuse and things of that nature. Okay, good, fine. We did it. Great. But what I saw this past summer and into the fall was a really concerted effort from public adjusters, trial attorneys. Miguel, the folks that you saw I was battling with, those folks have come out in full force. And they have basically said, wow, look at this. The Florida legislator and Governor DeSantis and the regulators have bowed down to the greed of the insurance companies, and we've gutted consumer protections for the greed of the insurance companies. You and I know, like, that's just so absolutely ridiculous. Right. But the public doesn't know. The media doesn't know. I was seeing media articles that were interviewing some of these folks. And so there's already a groundswell of political activity that's geared towards Tallahassee to get them to reverse this stuff. Because this is $1 billion moneymaker for the trial attorneys and the public adjusters. They made bank with the assignment of benefits and this other stuff. So the Insurance Advocacy Forum of Florida is not a consumer protection group. We are not a lobbying group for the insurance industry. This is a group that is impartial. We are lobbying for or promoting and advocating for what are the sound principles that need to exist, right, from a legislative, regulatory, and capital perspective to make insurance widely available in the state of Florida. Because guess what, Miguel? You can't make it affordable if it's not widely available.
100%.
So we're putting the cart before the horse, and everyone's talking about affordability. That's not the problem. The problem is availability.
Yeah.
With availability comes affordability, and yet no one's talking about that. And so I want to make sure that we have a neutral third party that can speak to all of the different parties around what it takes. You know, I'll be very frank. Like, step one, what will it take to have global reinsurance attracted to Florida? Right? Put yourself in their shoes. What will it take for them to make risky bets here in Florida? Is it a heavy legal, litigative environment? No, they're not going to do that. Is it a situation where the regulators won't allow rate, compensatory with the risk which is severe here in Florida? No. So those are just two easy things that are on the table. It's like, we got to solve these two things, or else reinsurance isn't coming.
I love that. And that last piece that you just talked about, and it's probably a topic for an entirely different session and conversation that would take hours to talk about, but it's always fascinating to me that you've got this nonprofit, you've got this advocacy forum that it's bootstrapped, right? I mean, you're not getting massive funding from all types of special interests, right? And it's right. We're talking about exactly, we wish, right? But it's unfortunate because, like, we're in the middle and we're trying to be kind of just in general, just in terms of the advocacy movement itself, trying to move toward benefiting the market. And it's so incredibly hard to do that when you're not backed by special interest, but you can't be backed by special interest because you've got to be objective, right?
I think there will be ultimately special interests who will see the value of what it is we're doing, but we have very strict criteria, right? Okay. Like, listen, if you're an insurance carrier and you donate to us, we're advocating for strong markets.
Right.
Not for you, not for the carrier. So there will be situations where we will be if carriers are acting. I spoke to a defense attorney who has lots of insurance companies as clients. And he was like, Nick, some of these companies are sloppy. Some of them deserve to be litigated against. It's like, well, then those aren't the firms we're going to advocate for. You
made a comment, and we talked about how, insurance is the product that a customer doesn't ever want to buy. You're not necessarily, I can't wait to go buy some insurance. You also don't want to use it because it's usually on a bad circumstance, right? And if you think about just the interactions that every insurance company has with every insurance customer, it's never necessarily positive, right? I'm buying insurance, in which case I'm giving the company money that for something I'm not really sure what I'm doing, or I've got a catastrophe or something that has happened. I'm in bad shape and I need to, oh wait, hold on. Before that, you're also sending me bills, right? You're invoicing me. So the relationship between an insured and an insurance company is not necessarily one built on a lot of positive emotion. But you've brought to me an idea or these concepts around IoT and how that could change some of the game there. So talk a little bit about what you've got in mind and some of the things that carriers could be focused on to shift that dynamic.
Business is about emotion. That's how sales are done. Like, you want to create an emotional response. People who are lining up for the iPhone, right, or lining up for the next Star Wars movie, there's an emotion there. Right. Like, those are fanatics about that product. Name the last time someone lined up to buy insurance. That doesn't happen. That's like they come kicking and screaming, right? So you nailed it, right? For the most part, since claims is a very small percentage of activity that occurs at an insurance company, for the most part, our engagement with insurance companies is completely unemotional. It's the bill comes. Well, that's not positive for sure. So at best, it's neutral. And it's likely to be slightly negative. It's likely like, I have to pay this bill, right? So think about it that way. So engagement with an insurance company is likely to behave in that kind of, it would have that kind of emotional paradigm to it. Okay, so we're going to go back in time, Miguel, to 2019. I get a Samsung device with 2 little tiny water pucks. And I got a small set of instructions. Put these water pucks in, bathroom or kitchen areas underneath a sink, somewhere where there's a propensity or a probability that water could leak. Okay, Miguel. So I did that, and I connect all of this stuff in. I get the app. The app works, tells me everything's connected. And I'm getting text messages day after day that's telling me no moisture detected. And I'm just like, that's a pain in the ass, right? Like, what is that? So, my God, I don't even know if these things are working correctly. Like I still don't know. Like, if there's a water leak, will this thing detect it? So one day I just came up with the brilliant idea. I just walked up, reached underneath the sink, grabbed one of the puck, licked my finger and touched the little sensor on it and put it back. 2 minutes later, I get a text message, right, that says moisture detected, humidity detected. Boom. My head exploded because immediately I got a sense of like, well, if I wasn't home, I could send somebody to my home to check it out, right? If I am home, I can go check it out, right? Like there's stuff I can do. And I started to immediately connect the dots to like, wow, I have an emotional connection. In one fell swoop, that one moment, I realized this thing solves all of those problems. This thing immediately gives you a sense of relief, a sense of peace, that I can sleep at night, that I know that if the water is leaking, I will know before it becomes an absolute catastrophe. Imagine if there was an insurance company brand on that, right? So take this and put that brand on it. I can tell you from an emotional standpoint, what you're sensing is every time you get that text message that nothing is wrong, right? And your carrier name is on that, they are getting the sense that like you're taking care of me. I can sleep at night. I'm getting my money's worth.
Right.
I'm actually paying you for something and I'm getting my money's worth. And for the first mover advantage here, for carriers that aren't doing this, this is one of those situations where even if a carrier was offering a cheaper price for their insurance, this is one of those things where you can develop like a fanatical base of like, well, I'm not switching. Why would I switch? If I switch, I'm not going to get the text messages anymore. If I switch, I won't have peace of mind. I won't be able to sleep at night.
I got to ask the question. I mean, these devices, they're out there, power failure detection, occupancy detection, moisture and humidity detection, obviously smoke detection, freeze detection. I mean, these are all out there and it's not expensive. You can go on Amazon, probably outfit your entire house for less than $100. So
that becomes the dynamic, that becomes the conundrum here, and why it hasn't taken off, because you have a conservative insurance industry that's saying, well, what if we pay for it and then they leave, right? And there's no incentive for the consumer to go rush and buy these things, even though they are. I can walk around my neighborhood and like every other door has a Ring doorbell, right? So they are buying this, but they're doing it in a haphazard way. They're doing it with no strategy to centralize this. And guess what, Miguel? They're getting no benefit from doing that. If there was actually an insurer that could corral the cats, so to speak, and kind of wrap that up, whether it's them giving the device as part of the policy, or whether it's like, hey, you're buying these devices and hey, we'll have a special discount. And if you buy these devices, here are the discounts that we can potentially give you on these. I think either way would work, but I think the insurance industry was too quick to throw up their hands and say, whoa, if we pay for these devices and they leave, that's not good for us. And we don't know if these devices are going to work. And my message to them is like, but they're not going to make things worse. We know that for a fact, right? So call it marketing. There's a complete emotional component here that I think is material to the insurance industry. And I'm just confused as to why it hasn't gotten more traction.
One of the things that I thought might be it, and I immediately found data that would suggest the opposite, was that the insurance companies were just overall, I guess, skeptical about adoption. But when I went out and I think I shared an article with you, I saw from Park Associates that 1/3 of all renters and homeowners would switch their insurance companies if they offered IoT. So that's it. And then, by the way, McKinsey published this report that I just saw that says that the average year-over-year growth of IoT penetration in the American household is 10% per year. That's the growth rate. And they estimate that by 2028, 100 million households That's more than half of American households, because I think there's like 140 million households. More than half of American households will have IoT. So insurance companies shouldn't they feel relatively confident that this is going to get adoption, that's going to be out in the market? Now, how do I leverage it?
Miguel, we're technophiles. Is that not obvious now? Like, as a society, like, we love our toys, we love our technology, right? And I don't think it's gender oriented as well. I think certain things might be, but I think all in all, I moved into a new place and I got a security camera, and it's fun. And now I'm thinking, like, I want to get some other cameras because I'm staring at a pond, Miguel, outside my window, and I occasionally see storks and gulls and other stuff hunting, probably an alligator as well. And I'm like, I should capture that, right? Like, I could use, like, there's a whole bunch of stuff that could happen. So as you mentioned, we're talking smoke detectors, fire, temperature, motion is an interesting one. Like, is someone somewhere they're not supposed to be?
I'm wondering if there's someone listening to this saying that there's an opportunity to perhaps for an insurtech or for some startup to come and be intermediary in that space, because not only is there the marketing and the distribution of those IoT devices, but one of the things that I would think about, and also to being a former carrier exec, is saying, how are we leveraging the data that those devices are capturing? And not in a big brother way, but in a way that helps the industry in terms of better loss information or better predictive information. And is there an opportunity for a third party to come in perhaps and orchestrate all of this for the carriers, maybe sign up for these things as a service?
I think there is. The example I gave you at the very beginning in 2019, that was an intermediary startup that was attempting to do that. They were too soon. So there is the risk that the industry will continue to drag your feet, but I think you're onto something, because I think most of these carriers probably do not have either the culture, the tech stack, or the impetus to be able to execute on this by themselves.
Right.
So it almost does make sense for an MGA/tech firm to say, hey, allow us to, front for us. This will still be, XYZ insurance company, right? But we'll manage all of the data, right? And we will collate it, right, and get it ready so that not only can we do data analytics on it, but your actuaries can dig into it as well. And I look at a firm, I would say Miguel, the firm that's probably farthest in the lead on this, that runs under the radar, is Cambridge Mobile Telematics, right? So Cambridge Mobile Telematics is they've been around for more than a decade, right? And believe it or not, out of the top 10 auto carriers, any of the top 10 auto carriers that are doing telematics, it is likely they're using Cambridge Mobile technology to be able to do this, because they can't. They just don't have the technology or culture or whatever it is that's preventing them from doing it. CMT does. And so CMT kind of manages that. So I believe auto insurer number 2, I'll let everybody guess who that is. I believe their telematics app is powered with CMT. So CMT is kind of running under the radar. But I will tell you, Miguel, CMT had a tough road at the very beginning. So we're seeing the same thing on the property side with these intermediaries. Yeah. CMT had a very tough time because most of the firms wanted to use actual plug-in devices. Yes, right. And what CMT focused on was the phone.
Correct.
Right. They focused on this, and as the technology in this began to surpass this, it became evident that's this is where that needs to reside. It needs to be an app on the phone. Everybody has it, so you can make it ubiquitous. It's still for this carrier, it's still voluntary to go in because I am a policyholder up there. So we just had a really interesting, I believe it was on LinkedIn with Kate Terry and others talking about telematics. And, most folks are just like, well, I don't want to be fined because I hard braked or I accelerated too hard or I went through a stop sign. It's that's not how these devices work. First of all, they are highly anonymous. in what they're doing. And essentially what it's doing is it's aggregating like a quarter of the year's worth of your activity. So one hard break isn't going to do anything. But if you're continuously hard braking, if you're a crappy driver, which Miguel driving around the state of Florida, I think that's most of us. But if you're a crappy driver, it's going to be reflected.
Sure.
Right?
Yeah.
In your telematics data, right?
Sure.
But there's an opportunity for the app to tell you and teach you. But it's not going to punish you if you brake hard one time or do something of that nature. So it's aggregating the data in such a way where it's just like, it's not specifically looking at Miguel Edwards. What it's looking at, it's like, hey, we're going to look at your last quarter. We're going to look at like, your propensity to hard brake, your propensity to over accelerate, your propensity to speed. And there's going to be a bunch of weighting factors that the actuaries do. And we're going to say, instead of $1,000 premium, Miguel, because I believe you are a good driver. You're one of the few. Your premium is now going to be, $900 because, and reward you for doing those right things, which is likely to continuously influence how you drive going forward because you're going to want more reward.
I've worked for an insurance company with a telematics product and I did not sign up. and then my current insurer also has a telematics product. I don't sign up. And I'm just one of those weird drivers, I believe, on the side that does not drive terribly safely, but I don't get into accidents. So,
okay. So let's take that particular scenario. So why hasn't there been more take up?
Right.
In these things? As the take-up starts to occur, you as a driver, let's just say how you just described yourself. I don't know if that's true or not. I don't believe you, Miguel, but I don't know if it's true. But let's say it's true, right? You're going to find fewer and fewer pockets to be able to take your business.
Yeah.
What does that mean? And I have been speaking on this many times. That is adverse selection in its classic form.
Yes.
So to me, it is an inevitability that every auto carrier will have telematics.
Yeah.
Every property carrier will have some mechanism with sensors. So given that dynamic, it behooves you to be a first mover in this space and establish a marketing presence. The longer you wait, the higher the likelihood is that you're going to be adversely selected as these other firms do jump in, because the poorer risk are going to be like, I don't want to get caught. So I'm going to go to those firms that aren't going to be big brother to me.
And so it will become a necessity. And I almost wonder, I was reading an article, I think it was in Business Insider last week or something to that effect, where the OEMs are actually paying more and more of a role of data collection within the car, just given the technology that exists. It's going to be interesting to see to whatever extent there actually becomes some type of data sharing partnership between the OEMs, assuming that the data is de-identified. That'll be interesting to see if that happens. Yeah. And then it'll also be interesting to see to what extent, once now we've got all of this data, I know that Tesla has tried this and failed miserably around the OEMs playing more of a role in the insurance space as providers.
Just goes to show you how hard insurance is.
Yeah, for sure.
If anyone would have a unique advantage, it would be Tesla.
You would think, right?
Our drivers are better. Our drivers are different. Our cars will prevent our drivers from being bad.
Right.
And they still can't get the insurance piece right. That's how challenging insurance is. That Tesla drivers, when offered the opportunity to leverage the technology that they are fanatic about, have decided, you know what? I might just go buy insurance from someone else because Tesla's too expensive.
Exactly.
It just goes to show you how people make decisions. By the way, the debate with Kate Terry and others on LinkedIn was about what you just described. So the data is being captured, whether you want it to be captured or not.
Yeah.
So if you're with an insurance carrier, you might be opting into a telematics program or you might be opting out. If you opt out, that does not mean your data is not being captured, because what Kate Terry found was that a lot of these OEMs have licensing agreements with LexisNexis. So when that Clue report gets pulled, it's telling the carrier or whatever that so-and-so is braking too hard or accelerating too hard. That data is already being captured.
Right.
I think this is a potential nightmare for LexisNexis, but that's a whole other conversation, Miguel.
No, indeed. Nick, I want to wrap this up with the thought process around the future, man. So when you start thinking about the future of insurance, obviously we've got the challenges that we're working through in the kind of various micro markets, et cetera. We've got technology on the scene. What else is on your mind just in terms of the future that you think folks listening to this need to have their eye focused toward?
Bringing emotion back into it. I think any entity that is living or dying based off of just purely insurance premium in 10 years could be in big trouble.
Mm-hmm.
You're a commodity, right? And so my big ticket item is that you must find a revenue source that's not premium oriented. Listen, I don't know how the program is working, but look what State Farm did with the alarm company.
ADT?
ADT.
Yeah.
So State Farm basically made such a massive investment with ADT. They have a
mm-hmm.
joint venture here, right? State Farm has now fully committed to this. Hey, if you're a State Farm policyholder, we have this ADT product and we can prevent people from breaking into your home and give some sense of security to it. In the future, State Farm, I think, is recognizing that like policyholders that actively have ADT equipment inside their home are much less willing or will be much less willing to switch to a competitor, even if the premium is cheaper, because there's a switching cost.
Yeah, it's an ecosystem.
And so insurance carriers need to be actively engaging and trying to either create their own ecosystem, partnering in another ecosystem, right? Or, having some kind of additional risk management product. Like look at what Hippo is doing with the warranty programs. Hippo is completely pivoted from homeowners to they're going a mile deep, and they basically want the homeowner to think of Hippo for anything that could possibly go wrong with the house. It does not have to be a covered peril. And I think that's the way it has to work. And Miguel, like, even if you're a county mutual, there's still hope for you. It's just like you have to jump into one of these ecosystems. And what I tell, when I engage with folks at like NAMIC, for instance, my advice to them is like, you still have something of value. You have an insurance license and you have surplus and you know how to run an insurance operation. That is still incredibly valuable, right? You can rent that out.
Right.
You can find, as you said, you can find those intermediaries that you can partner with, right? And make your product not just an insurance policy, but something with a little bit more girth to it.
Seems to be a ton in there, and I think the one area that that I think you've hit on that is a huge call to action is making sure that you're not that last carrier that has failed to adopt all of these these external components that need to be brought in to the sales process, to the servicing process using technology. Otherwise, you will be adversely selected against. That's a huge call to action there. Well, I don't know, Nick, did you have anything else that you thought would be worth bringing up that we need to weave into the discussion? Because we've hit a lot of the points that I wanted to hit. This has been a great conversation.
I would like to, with a megaphone, scream out to anyone that's listening to your podcast is likely very, a sharp tool, right? So, listen, you can be a sharp tool. You could be a sharp tool with a megaphone. At Insurance Nerds, we are looking for writers. We are looking for folks who have a propensity, who want to share and give back to the industry. It costs you nothing. You get a free editor, right? And for those folks that are out there that are looking, writing clarifies thoughts and clarifies the mind. So even if you are an exec at a company and you want to write on the side, by all means, we have an audience that's hungry for wisdom and information and insights. Share it. It's for the best interest of the next generation of insurance professionals. Rather than having them learn on the job the hard way, let's teach them so that they don't have to learn the hard way. They can learn from our mistakes, our experiences as well. So I kind of want to depart with that. It's like for your audience, by all means, we have a very large audience that's hungry for wisdom, and share it.
Thank you for joining this episode of 5 Minutes. If you've enjoyed our discussion, we'd love for you to share with anyone else you think might find it interesting. Also, please subscribe on whatever podcast platform you're listening on and hit that bell to stay on top of the game with our practical 5-minute episodes. We look forward to seeing you again next week.